The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks. Welcome to the Diagnostic Trading Hour. Happy Monday here. And it was great seeing some of you out at the Forex and Options Trading Expo in Vegas this past weekend. So it's a shout out to everybody that was out there. It was a great expo. Had a lot of good speakers, a lot of good events. And go ahead and do our daily market wrap. Pretty flat across the board, except for just a couple things that are moving. We got the S&Ps, they're down just 3.5. We got the Russell down 6.8. Nasdaq's down 5 1/4, and the Dow is down 33. And really, they've just been oscillating up and down all morning. So really nothing big since the market opened at all on those. Over on the metals, looking at gold, it is down just 90 cents. And silver, a little bit of a move, down 0.171. That's about 0.5% move over on silver. And then checking out natural gas, it actually has had quite a bit of a move, down 0.074 right now on the day. And oil pretty flat, down 11 cents. Big moves over in the commodities markets on the ags, and corn and soybeans have definitely been some big movers today. And so we can check those out. Look over here, and I'll pull those charts up for you. And you can see corn is just, it opened up on Sunday, and it's just moved down, and it just started dropping this morning. And it's been going ever since. It finally started to do a little bit of a hesitation. Got the same thing over on the soybeans, and it has just been plummeting down, and a major move down on soybeans today. It's down 4% on the day, and corn is literally down, let's see, what is that, 3.8%, 29.75 points. Checking out the currencies, we got, Aussie dollar down 67 pips, so decent little move over on the Aussie dollar. Euro dollar pretty flat, down 14 pips, and pound dollar is up 38 pips on the day, with U.S. franc sitting pretty flat at just down a pip. So that is our quick market wrap summary for you. And let's see what else we got going on. So we like to look at, of course, that's just the daily market wrap. We also like to check out what's going on the fundamental side of things. And, of course, after that big move that we had last week with the huge Fed announcement, and Bernanke basically, I guess, almost... maybe Obama hasn't outraised Romney, but he definitely has outspent him through all the QE. So just some crazy QE going on. It'll be interesting to see how the market continues to react to this QE, because there was such a massive rally leading into QE. And there's a lot of facts. I'm going to bring them up. We're going to talk about it over the next week, but it's looking at how it really has had very, very little impact. And the reason it has had little impact, there's really one very simple reason that QE has not had a huge impact on the market. And even though it has, of course, made the market rally on the expectation, it hasn't really fixed the economy. Why? Well, the bottom line is the money supply. The money is not going into the market. It's going into banks. And those banks, they're buying the mortgage-backed securities, and at best the banks are, putting that money into things like stocks and stuff, and futures and whatever else that they're trading in, that they're putting their money into. So it hasn't went into the consumer's hands, where it changes money and changes hands time over time, and then increases economic activity. That's why it's had little to literally zero impact on GDP, also little impact on unemployment, because again, the money is not going into the money supply. And it basically is, Bernanke's creating this fear of inflation. Housing prices are going to go up. Well, yeah, because you're devaluing the dollar. So it sort of goes hand in hand. But, overall, it's had very little impact, and this one won't have impact either. But, will it move the market? Obviously, it moved the market already before it happened. It moved the market after it happened. Will continue to move the market. It'll probably be something like 2010, where he, announced it, and then the market went sort of, choppy sidewards for, a few weeks. I doubt we'll see just a major activity this coming week. And then it, sort of rallied on up into the end of the year. So that would be a big surprise to see an October, November, December move up. But, of course, we got the Troika still has to report on Greece. But with all the ESM stuff and the German court ruling, that ought to be less of an impact. And, as soon as that happened, then they were filing for Greece to actually get another bailout. So that was interesting. They waited for all that stuff to happen, and then boom, they released their next request. And then we're going to have to look at the economic numbers. So we're doing QE. So what impact does it have? Well, we won't really even see any impact until, supposedly till even November anyway. But we'll see the market rally, which makes people feel better. And then, of course, we got the elections coming up in November. And that's going to, there's going to be a lot of jitteriness over that. Who wins, Obama wins health stock store, or health stocks will soar, and Romney wins, plan on those plummeting, and, other things like bank stocks and stuff will probably start rising quite a bit. With all that in mind, on through the end of the year, we have the fiscal cliff, which is a major economic concern for continued decline in GDP. And, of course, we have the tax ceiling, or the tax hikes having a major issue. Those Bush tax credits and, cuts and everything expire, what happens? Well, capital gains goes up. Well, if you're a manager of a huge fund and you've made these massive profits because of QE, and you're about to give away another 10 or 15% guaranteed in taxes, depending on who's elected and how all that works out. But if hey, I don't know whether or not I'm going to pay this 10 or 15% until they get in session, and what they do, what are you going to do? You're going to take your profits. Usually you want to wait till that next year, let your profits roll into the next year, so if you have losses, the profits are offset. But they may just decide to take them off the table. And if they do, that actually could kill the Santa Claus rally, which would be very interesting. It'd be a rare cycle to see take place. But the taxes could do that. Also, we have, of course, the debt ceiling. And we are going to hit that in December based on all projections. And the Fed, I'm sure, will do some sort of fun little game to extend that. But the bottom line, the Fed has basically just used its last round of bullets. So, it's at zero. And it now, this isn't just QE. This is open-ended QE. This isn't we're going to buy this much. We're going to buy this much, which is basically $85 billion, right? Because they already have the whole Operation Twist going on. So if you combine the Operation Twist with the current one, you got $85 billion a month. And we're going to do so until we see unemployment and economic conditions become satisfactory. So they just left it open. This was an all-in move by the Fed with little to no room to do anything else. So at this point, Bernanke either is going to come out as a hero or he's going to come out as the guy that killed the dollar. But, my guess is somewhere around the latter side. But, they went all in. And so, it's interesting now. You got to see how things would play out. Is this all-in move by the Fed? And, of course, you know what he's going to be doing going forward. It's going to be Congress needs to get their stuff together. I've done everything I can do. We're all in. We're giving money. We're buying all these bonds. And we haven't even put a limit on it. And we've kept interest rates low. We've extended that out. And I've used all the things in the Fed's capacity to make this happen. But at the end of the day, if Congress can't act, then, basically confidence won't return to the consumers and they won't go out there and spend money. So that will be the October, speech that we're going to hear. The October, November speech is when he comes out and he's making his announcements. It's all going to be about Congress because anything that's not coming out positive is going to be all about Congress. But, all the bullets have been used. So, if there's something else they got, I'm sure they can make up something else. But as far as the huge impacts and being able to, do that kind of money, their balance sheet is massive now. And it's getting obviously bigger and bigger and bigger. So, one of the, over in the Tiger Den, somebody had a perfect statement that said, checkmate Congress, and that's exactly right. So that's the Axeman there. And, he basically put the Congress into a corner. He's like, you can't blame me for anything, man. I've done everything I can do. So you can blame me because you don't like how I've done stuff, but at least I've done something. And, he's put himself in a position, just like sort of, what happened over there with Draghi. He's like, hey, I promised unlimited bailout money to Europe. And I say unlimited every country, no matter how much they need. We'll do it as long as they ask and as long as they do whatever we tell them to. So, it's really interesting. All these heads of the Feds are putting themselves in positions to where it's not their fault. So, it's going to be an interesting coming year. When they start going all in like that and they start making sure they're setting themselves up to be the ones that are not at fault, it just makes you really wonder what's about to happen next. What's around the corner? And, obviously if any of us knew, we'd be very, very, very wealthy people. But, it can't be good. You don't go all in unless you have nothing left or unless you know you got it. And he doesn't know he got it. So he has nothing left. And so basically the only thing he knows he's got is he's got Congress in a corner now. And I don't think the Fed's move are going to move Congress. So we better be getting some good reports is all I got to say, because there's nothing left to do that, he can step in and, play his games on anymore. So we'll be keeping an eye on that. We'll be keeping you updated. And like I said, money supply is stagnant. GDP is flat. And unemployment continues to rise despite 2 rounds already. And now we got round 3 of, unlimited. So you don't even need a QE for it. You just got the thing open-ended. So he'll probably be kicked out in January 2014 is my guess. And he'll print money all the way there. So that way, whenever he is kicked out and everything starts deflating and the bond buying stops, he can be like, hey, you fired me. My plan was working. It's the new guy's fault. So, but it's just real interesting as you watch how all these little things are playing out. So what do we got going on this week? Okay. What do you need to be aware of? Well, there's a few things going on, nothing major, but we do have a couple things that you do want to keep your eye on. We had the Empire State Manufacturing Index, and that came out this morning. And you can sort of see the impact on the market was minimal, but the number was wretched. And, of course, what is that a reflection of? QE. So if we go over here and we look, at the Empire State Manufacturing Index, and that came out, this morning, and we can look at, the exact impact that had on the market. And like I said, it was very, very, very small. And we can see, let's see what that had at 7:30 Central, 8:30 Eastern time there. And, right here, that comes down a little bit, goes up. Just moves along like nothing's happening. And it's one of the worst levels we've had literally in the last couple of years. So, just a horrible, horrible number. And, going back, and if I go back and look at just the history, I've been trying to find like when it's been this low. And I'm having a hard time. It's been a while. And I get that negative 10.4. They're expecting a negative 1.9, and they got a negative 10.4 on it. And it was like since November of 2010, we haven't had a number that low, which was really interesting because that was right around when Mr. Bernanke announced QE2. So, basically he saw that everything was declining and, stepped in. He sees everything's declining now and he steps in. Now, what happened after November of 2010 on the Empire Manufacturing Index? If we check that out, well, it went up huge. So it went up to like 10.6 the following month. Right now we're at negative 10. And it was negative, let's see, that time it was negative 11.1, went up to 10.6, 11.9, 15, 17, 21. I mean, the thing just flew up. So QE worked that time. We're going to see if it works this time. And if you don't know what the, announcement is, basically the Empire State Manufacturing Index, by the way, it's a Federal Reserve number. So they knew what was coming next, okay? And basically it's just a leading indicator of economic health and how quickly businesses react to market conditions. And they look at New York and they survey a bunch of manufacturers about how they feel about business economic conditions. Hold on right there. We'll come back. We'll check out what else is coming up.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoades, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhoades, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhoades, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back to the Diagnostic Trading Hour here. And, wanted to make sure that y'all knew we do have that event coming up. And if you have not registered, then you want to register right away. And it's a free event being hosted by Nadex. And just go to TFNN.com, click on Free Live Workshop, click on Dynamic Trading Strategies, in person and live, 8:30 to 12 o'clock noon in Tampa, Florida on September 29th. And the layout's going to be, it's going to be at the Grand Hyatt there in Tampa Bay. And the layout's going to be Dan Cook's going to come in, do an intro to Nadex. He's going to wrap things up. In between, you're going to get Tom O'Brien teaching you about how he identifies the trend, how he sets up the trade. I'm going to be going in and talking about the diagnostic trading formula and teaching you about binaries and spreads. And then we're going to do a wrap-up on risk and money management, combining his trade setups and how he identifies trends with the Nadex products. And we're going to do a little tag team on that and teach you exactly how to put the two together. So it's going to be a really powerful, great event. And I look forward to seeing you there. If you can make it, please hop on the website, register. Please only register if you are definitely going to make it. Space is limited. It is free, but it's free because Nadex is paying for it. And we want to make sure that every seat that is available is used. And so we don't want any empty seats there. And so, again, if you can make it, please do register. And you just got to put your basic information in there, and we will hold your seat for you. But take that right away before it is down, and we have to take it off because it's full. So, again, register right away if you're going to be in that Tampa Bay area, 3.5 hours, September 29th on Saturday morning. And, again, you can find that on TFNN.com. And if you haven't signed up for a Nadex account, go ahead and click on the Nadex banner on TFNN, and you'll see that you can click on Create an Account. And under Create an Account, you can open a live account. You only have to have $100 to fund a live account within 5 minutes from start to funded and can trade, whatever it is, as long as it takes. So it's fast, it's easy, gets you access to the full live, real thing, charts, everything. If you want a demo account, hop over here, click on Open a Demo Account. They'll give you $25,000 in funding money to start learning and playing with. If that does expire, you can always let them know, hey, I need a little more time on my demo account. Just got to give them a call and let them know. But go ahead and put in your username, first name, last name, phone number, and email address, and then click Apply for Demo. And within a few seconds, you'll get a password, and you'll be able to log in and check it out and see exactly how it works right away. So I just want to remind y'all that event that's coming up, and of course the other huge event coming up is the Tiger Dollar Sell. And it's basically, there's a little button on there. You better grab it because they are taking it down. So hop on there if you want to grab that and take advantage of that to get that discounted Tiger Dollars and get access to that free live trading workshop that Tom O'Brien's going to be doing. Also, now that's not the Nadex event. That's two separate events. So make sure to register for the free live workshop for Nadex in Tampa, and then also take advantage of the Tiger Dollar Sell in order to take advantage of that event. Now, one of the things we were looking at some of the things that are coming up this week. And it's, like I said, overall it's a pretty quiet week, but we do have a couple things. FOMC member Lacker is going to be having a little, speech tomorrow, and right now it seems like anytime anybody speaks, it has a, decent impact. And you're going to have, Dudley's going to be speaking tomorrow, and he is going to speak on the regional and national economic conditions. And a little bit more impactful is going to be Lacker's speech, which is going to be 6:45 tomorrow night Central Time. And his speech is maximum employment and monetary policy, and that'll be going out in New York. And that really is our big events for tomorrow. I mean, there'll be a couple other things, some long-term purchases, treasury, things like that. But that really is the biggest events we got going tomorrow that you need to keep things on. You will want to look at like the yen, of course, they're going to be making their monetary policy statement tomorrow night, and as well as I think tonight we're going to be having a policy statement out of Australia as well at 8:30 Central Time. So if you're have any Aussie dollar traders out there, be checking that out tonight, 8:30. And then, of course, if any yen traders out there, be checking out the policy statements that are going to be coming out from the Japanese bank. And we go over, and Wednesday, we're going to have a few things going on. You'll have the Bank of Japan, of course, that's that whole night there. They'll have their whole conference and their meeting minutes and their rate policy, everything. But then we open up in the morning. It's going to be all about home sales. And that is what Bernanke made it all about, right? Homes, 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 homes. And so he's buying mortgage-backed securities, homes get inflated, on down the list. So we're going to be having building permits, housing starts, existing home sales, all that coming in at the, like that same day on Wednesday. So building permits and housing starts will come in at 7:30. And building permits, getting permission to start actually started, and then how many that are already built and done and completed have been lived in, owned, how many of those have been sold. That'll happen at 9 a.m., 10 o'clock Eastern time. So 9 a.m. Central, 10 Eastern. So all about homes. And one of the great things to trade on home announcements is copper, because copper moves when homes move, right? Because there's a lot of copper in homes. So that's something you can trade over at Nadex as well with limited defined risk and massive leverage. Check it out. Stay right there. We'll be right back after this commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And again, like I said, Wednesday is going to be the home day. So building permits, housing starts, existing home sales. And then, of course, we'll have crude oil inventories to watch out for. Okay, we have every Wednesday at 9:30 Central, 10:30 Eastern. And really nothing big going on. We have New Zealand GDP coming out, so that'll be big if you're a New Zealand dollar trader. And we'll be walking on over to Thursday. So what is coming up on Thursday? Well, Bank of Japan's doing some more conversation. So, again, the U.S. yen is going to have a little activity this week with all that happening. And Germany, France, all going to be having some announcements coming out. And big thing's going to be the Spanish 10-year bond auction. So I'm just waiting for that to blow up, personally. So not that I'm wanting it to. I mean, I want everything to improve. That'd be good for everybody. But, they don't want to accept any money. And so they don't accept any money without conditions. Or with conditions, they don't accept any money, therefore they won't get any. And so there is no, bond buying program in Europe, basically. And so we'll see how that goes. But they have a 10-year bond auction. Sure, it'll be halfway decent until, the next bad news comes out for them. But then after that, the big thing, of course, on Thursday, like every Thursday, unemployment claims. That'll continue to be a big spotlight. We'll probably sort of take a little bit more precedence now that a lot of other things have happened with QE and everything. We ought to see a little bit more impact on the unemployment claims reports on Thursdays again. Lockhart decided to have a whole other conversation again, and he'll be coming in an hour after, and he'll be talking about the future of workforce development. So FOMC is doing a lot of speeches lately. And then later o'clock at 9 a.m., 10 o'clock Central on Thursday, we'll have the Philly Fed Manufacturing Index. Very similar to the one we had today. But, of course, they're interviewing people in the manufacturing sector in Philadelphia. And the Federal Reserve is going through and asking them about, general business conditions. And so we'll see if that continues to go up or down. And big thing is at 11 o'clock Central noon Eastern time on Thursday is Mario Draghi is going to have a big ECB press conference. So curious to see what he's going to say. I'm sure everybody else is too. And basically what's going on, and basically it's a big press conference at the regarding the ESM, the European Stability Mechanism. And it's going to be happening in Frankfurt, Germany. And this, of course, happening now after the German Supreme Court has not completely blocked the ESM. They basically stripped it of power in the sense of they can't do anything without the German vote to increase the amount of the bailout. But they didn't, block the injunction completely either. So he's, of course, moving towards that. His goal is to have that thing done, signed, in place by January. And we'll see if he accomplishes that. But there'll be a lot of details about that coming out. And, of course, there'll be some volatility during that speech, I'm sure. And so basically every time that has happened, and this is supposed to happen literally on a pretty consistent basis, where he's going to start coming out and talking about the ESM a whole lot, obviously, since they're trying to get it out there. And then Friday, we're going to be wrapping up. Lockhart decides to have a whole other speech, and that's pretty much it on Friday as far as anything you need to be watching on the federal, or economic news announcements that's going to be impacting things pretty big. So pretty light week overall. And, so that sort of wraps up our fundamental review on the diagnostic side of trading. And if we go over and we check out the deviation side, the statistical side, like how far has the market moved, is it expected to move, etc. And we can check out, obviously, as we know, there's been little to no movement today. And 1465 is about as high as we expect. 1452 is about as low as we expect on the S&P futures today. And that'd be a half standard deviation move. Looking over at the Russell, and we can see it, it has, it's probably one of the weaker ones right now. It's moved down and it continued to move down as far as the indices go. And its low side, half a deviation is 855. It's hit that. The next one's 853.39. It's almost hit that. And let's see here, the actual low on the day so far, if we go over and look at it, it's actually 853.40. So within 1 cent of the 0.7 deviation level. And so, we may, if we see any more move, I don't see us seeing a full deviation move today, but we could. But if we did, it'd go down, the lowest we expect is like basically 843, 850. So really not too much further of a move down than we expect. And it really just hit on that 0.7. This is where I'd be tightening my stops, definitely if I hadn't already been done in and out. And, be looking to, at most take off a good chunk of the profits if it does actually go down to that 850 level. Looking over at the NASDAQ, which has been pretty flat. And the range there, 28.38, it stayed within that. And then on up to, we got a range of 28.64. And it's obviously stayed within that as well. So really not a whole lot going on in NASDAQ today. I'm sure we'll see with the iPhone sales and all that fun stuff coming out here, lines are starting to form and everything. We'll start seeing the whole campouts going on. That'll give a little bit of boost to the NASDAQ soon. And checking out the Dow. Over on the Dow, the range that we're looking at on that, on a slow day like we expect today, and it's basically 13,461 up to 13,575, and it's definitely staying within that range. So not a whole lot going on there. Copper, again, going to be a big thing this week because we got housing going on. Okay, so copper is already down at 3.7875, which puts it down, let's see, almost, actually past the 0.7, almost to a 1 standard deviation level, which would be 3.774. So, again, not standard deviation, I'm sorry, implied deviation level. And a standard deviation is based on historical movement. Implied deviation is based on expected future movement based on the implied volatility in the underlying options. So, actually extracting that out of the options on the futures contracts in copper. And so it's had a pretty good move, and we should expect some good moves in copper this week. And copper is a little volatile and crazy, though, so be careful. And I suggest checking out Nadex to trade copper. They got the binaries. Great to do, possibly like a straddle on the binaries, like right before the news announcements come out. And or they also have the spreads. You can do straddles on spreads. You can go directional on spreads. Things starts moving, you can hop in and have limited risk in the process. And we go over and we can check out gold. And gold really, after it's this like huge, massive move up, $5,000 move, has just went flat. So now as this QE starts going into effect, and as these bonds start getting purchased and this money starts getting printed, then we most likely should see gold continue to rise. So, basically, as the money gets out there, then it will, of course, cause inflation, mostly in what we should expect is the commodity markets. And, so nothing to look at really big on there today, but as that money starts coming into the market, silver, a little bit of a drop down on the silver side, and checking out 34.37 right now, and, that's almost a half deviation move, so really not a big deal on silver. And natural gas has actually decided to have a big move it had this morning. And checking out natural gas, it's down at 2.868, and just right below the 0.7 deviation level. 2.848 would actually be one full deviation move down, but it looks like it's sort of done for the day. So, but definitely sort of has that habit. You can see it'll make its move and then just chill out. So make its move and chilling out. So you really see that move early in the morning. That's the time to hop in there. And again, natural gas can be a little funny to trade. If you trade outright futures, it can be pretty scary. So trade it on Nadex, and you can relax a little bit in the process. And that's one of the things I love about trading on Nadex is not having to stress out about getting stopped out, because you can't get stopped out. You can't get whipped out of a trade by a spike, nothing like that. And you can actually enjoy your trading. And CL, so light sweet crude oil futures. So being the contract that Nadex follows is at 98.57 right now, and really not a big move since last Friday. Been pretty flat overall. Now, what do we expect? Well, with inflation, it should rise, right? So with all this pumping out of money, the other thing that should make oil go up, of course, would be any increased hostility. In the Middle East, that'd be a new one, right? But there's a lot of things going on, and the Israeli Prime Minister is basically saying, hey, pick a side, make a stance, do something. Don't wait until they have the bomb before you decide to do something about it. And he's basically calling out all the politicians and saying, either do something or don't, but tell us, because if you're not going to, we're going to. So if war breaks out, oil should just skyrocket. And, you can take advantage of that. You could put on some binaries. You could even do some weekly binaries as it goes by, just waiting for that big move one way or the other on the oil side. But basically, just that money supply should start pushing oil up more and more, and war or, fear of war will also do the same thing. Corn just dropping. I mean, it was up, and then it's just sort of been chilling out lately. And we can check out, it was up at 8.49 not too long ago. So literally just in the last 30, 45 days here. And it's starting to move really in a downtrend. So a lot of that anticipation issues been built in. And what's going on now, of course, is, there is finally some rain, which is helping out in some areas. But also, farmers and stuff, they had to move on. So they picked out, other crops. They've picked out other things like, what are they going to do to feed their cattle with? Because they're not going to be able to feed it with corn. And so, so they're obviously that's dropping some of the supply. People are building that in. And corn can move fast. It can be crazy. You can move 4 or 5 points in a matter of a second. So definitely trade with protection with Nadex in that process. And, don't trade naked and exposed on the futures market, on especially markets like corn and soybeans. And hopping over on soybeans, again, just a massive, that's just a drop. And let's see, it moved down to what? We got 16.69 there on soybeans. And, that's a full triple deviation move. It's a huge move. And, so to see a move like that is very rare. And so we got to keep our eye on soybeans, but it may be done with this big rally and ready just to go ahead and hit the reset button. And you can see it started moving down and a little pullback, and then it just, it broke it with conviction. So we definitely got a, ABCD reversal there, very solid in place. And, want to check out the currencies. One of the fun currencies to look at, I don't know if you've checked this out lately, Euro franc. As you may or may not know, Switzerland basically pegged the Euro franc. They said, you're not going to kill our currency. And so we're going to go ahead and put it at 1.2 euros, and we're not letting it go below that. And so just a really interesting trade. And you can see how it just, went flat. They're like, it is not going to continue to go down. We don't care what happens. And so the bank intervened, and they made sure that didn't happen. And definitely made for some very, very cool trading opportunities during that time. Not necessarily massive, but you go in and, you just look at these moves right here. and you hop in and you grab that, and you just keep buying and set and take profit orders every day. I mean, great for binaries, great for spreads, great for all that. Well, once Draghi came out and made his big speech, Euro started taking back off again. But if we see it falling back, remember this play. Remember Euro Franc, and remember you can hop in there and just grab some money every day. Okay, so it's a very, very cool way to trade it. Let's say you don't have access, like Nadex doesn't have Euro Franc. They have Euro Dollar, they have US Franc. Make your own Euro Franc. Okay, so if you're wanting to buy the Euro Franc, you'd buy the Euro Dollar, and then you got the US Franc, right? So you're going to sell the Franc. Therefore, you'd sell U.S. Franc. Or, I'm sorry, you'd buy, actually, if you bought U.S. Franc, then you'd be buying your U.S. and selling francs. So buy Euro Dollar, buy U.S. Franc. You're making your own Euro Franc by crossing out the dollars in the process. But there's a lot of cool ways to play that. But if it gets back down there, I mean, very rarely do you have a price pegged saying this is what it's going to be. And you can take advantage of that. There's a lot of option strategies you can use to take advantage of that. And, of course, the futures you can take advantage of it with. There's the Forex, there's the spreads, there's the binaries. And there's just been some crazy wild swings because all that pressure has been there, and then, boom, it just got released. And you can see how it just shot up. And, 100, 150 pips. Just so keep that one in your mind. If, sort of check it, maybe set an alert for yourself. It gets back down to, 1.2020 or something like that. So that way you can start watching it because, you got some pretty solid trades. You know where to take some profit. Don't keep trying to ride that thing below 1.2. You're going to be severely upset. And if we go over and we check out, the Euro Dollar itself and what's going on there, dollar getting killed, Euro rising in the process. And sort of funny, Euro announces it will buy unlimited bonds. It rises. Fed says we are going to, in fact, buy them, and dollar gets killed. And because, of course, everybody knows the Euro is not really going to have to buy bonds. The U.S. is. So in that process, we got that uptrend moving back up. And I know some people have been really hoping for that big move, and they finally are getting it. So we'll see. It's starting to run into a little bit of resistance here. We'll see how far it can keep rallying on everything. But with the continued bond buying, it ought to keep weakening the dollar, which should help out with the euro, absent any horrible news coming out. Pound dollar is pushing some highs. So, keep that in mind on your profit targets. You see right there, our high from this year is 1.83004. And we can even back out on this, go out to the weeks. And you can see, we got a pretty solid level right here. And it just pulled right back up to this. So we're gonna see a move, a big move, one way or the other, right at where we're at. And we are at a perfect point to set up some straddles and things like that on the pound dollar. So just be checking that out and seeing that pause now. And either it's going to pull back down, or it's just going to bust on through. And I got the U.S. franc. And on the U.S. franc, obviously we were talking about the Euro franc earlier. On the U.S. franc itself, and it's actually the dollar starting to head back down, giving the franc some more strength in the process, and that should continue. Again, this is all this impact by QE, and it's really interesting to see how the market gets impacted as you go through and you look at, okay, just one thing on the dollar, and how does that affect everything else? And we got our partners here in Canada, the U.S. Canadian, and dollar getting pegged back down there, and we're dropping back below $1 Canada again too. So there'll be a lot of economic impacts. And just make sure you trade safe in this. We got a lot of things going on, and you just don't want to have that unlimited exposure when these big moves take off. Stay right there. We'll be right back after the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour here with Darrell Martin. And let's go ahead and do a wrap-up for you. We already went through each market. We talked about the fundamentals. We went through the deviations. We talked about some possible technical plays and setups at key, resistance and support levels. And we got the seasonal analysis. By the way, I want to do the wrap-up for you on the seasonal analysis. Again, sort of a flat week. We got triple witching coming up. That's very historically is a very negative day during the month of September. So looking for a big Friday down day coming up. Now, the week after is usually very, very, very bullish. So we'll see if the seasonal stays true. But seasonals just give you an idea. You don't have the opinion, but you want to have okay, historically, this is what happens. So be aware of that as you go into your trades. And just, let that, okay, well, this makes sense. This is going with the seasonal. Or, hey, it's, the seasonal sort of off balance. Make sure, at the end of the day, you got to follow the chart. Okay, so at the end of the day, follow the chart, but be aware. Be aware of statistical deviation levels. Be aware of seasonal, analysis and trends. And, be aware of fundamental news that's coming out. And, of course, be aware of your technicals and, your chart pattern setups. And then just follow the price action and the volume. Because that's, at the end of the day, that's all that counts. And, oil has made sort of a big move here at the end. It was pretty flat when we first started the show, and it's just been sort of taken off. So you can definitely check that out, and I can back out on that for you and look at that. But look at that. It's like peace in the Middle East. I mean, that thing just went down. So, oh my goodness. I mean, that's just a massive, massive drop. several dollar drop. Anyways, I don't know if anybody else caught that one. So, but wow, so people got hurt. I guarantee you, they were long. Now, you know who didn't get hurt bad on that? People on Nadex. Why? Because they cannot get stopped out of a trade. It cannot go against them further than where they had their box on. So if you were on the boxes over here and you were trading, and let's say you were on, and this is a perfect opportunity to show you this, okay? If I go to commodities, bull spreads, and I go to crude oil, and, let's just pick the 8 to 2:30 time frame, and let's say you were in here, and you bought at, let's pick a strike, 96, 99? Yeah, let's just say you're in here this morning at 99, sort of, going along, and you're like, man, with everything, inflation, all that, it's going to keep going up. And so you hopped in on this trade, what would you be looking at? Okay? What would your risk been looking like this morning? Let's see if we can get this like, there's nothing going on to even refresh. You would have had a very small risk. 99, 20, 99, 30, 20, 30 cents on that trade. And there we go. And you can see, we'll pull it up, we'll look back. And even if you're in it at noon, you're at 99.67. If you're in here, let's say you hopped in before the big drop, then, 99.20 right there. So, this can happen, and it can happen fast, and especially in futures, and they are so leveraged. But you were talking about a $3,000, nearly $4,000 move in a single contract in oil in less than 4 minutes. Okay? Less than 4 minutes. So be careful. Use Nadex. I just want to push that to you. It is going to help limit your risk. And you know what? Let's just say this thing does make a move on back up. Guess what? You actually could still be profitable on the trade. So we'll see where it ends out at the end of the day on oil, but that is just a massive move. And if you're wanting to hop in and you're wanting to join in now and it looks like it's starting to move back down, let me check out and see what we got. We got it at 97.20 right now. We're going to need a low-risk trade. And let's hop over here. Let's see what we can find. We got 99 as a high. We got 99 as a high there. There we go. We got 99.50. So you have to go with the 99. If you go with 99, click right here. Check this out. Sell these. You're looking at a risk of 162 for 338 on that trade. And so, anyways, a lot going on right now. And anyways, y'all have a great day. Check it out. Hop on Nadex and see how you can limit your risk in crazy spike days like this. All right. I'll see you tomorrow.